Alright, and his number one rule of money is never lose your money. Control your taxes. So now's an amazing time for people to get into the real estate game. If you need to find money, where do you find money? Money that's sitting there, ready to be used for other purposes. And so that's why I love real estate and I love life insurance. I'm saying put this cash into a policy and borrow the cash from the life insurance company. Well, thank you for attending. A few years ago when I first learned about this and growing up in business my whole life, I learned a lot about money and business and what to do with money. And I remember thinking, nobody knows this stuff. Nobody knows anything about how the wealthy use life insurance to buy real estate and build their generational wealth. This is me and my fiance down here. We run Infinite Capital Solutions. We've been in business for 3 years. We have 20 agents now in the office. In the beginning, it was just me. Then it was just me and her. And then now we expanded in the last year. We've grown to 22 agents as of this morning. We are underneath of Creative Financial Network. They have 3 offices, one in Palm Beach, one in Fort Lauderdale, and one in Miami that we run. And Gil Cohen was the whole Southeast Division of the United States founder for MetLife and top producer, top office. And so he is mentoring me. And between the 3 of them, they have over 100 years of experience in financial services. And we're underneath AmeriLife, which is a private equity financial services company. Alright, and his number one rule of money is never lose your money. And so everything I've always done, I always want to make sure I never lose my money. Alright, his number 2 rule of money, you know what it is?
Make money?
Never lose your money. Read number 1. Alright, and then I also added my own rule number 3, which is to control your taxes. You want to be able to control your taxes. You want to be able to have control over your money and where you're doing with your money. And so that's really why I got started with this business. I got connected with some people making multiple 7 figures in the business loan services first. And then I got connected with some people in insurance and I started doing both. And I was like, insurance is really where I am meant to be. And I figured that partnering up with real estate is really the best way because right now we have a major correction underway. There's a major debt issue. There's $2.7 trillion in debt that's due between now and 2027. Fannie Mae has new changes. Biden has had incentives, I guess, for another couple months, right? Construction is stalled all over the country. There's major challenges right now, especially sidelining institutions. So now is an amazing time for people to get into the real estate game. And really, we prefer multifamily specifically. Why is multifamily the preferred investment vehicle? Because most people right now are looking to move into apartments. They can't be easily replaced. You can produce and grow cash flow, right? Single family homes are great for you and your family. As an investment vehicle, you could have way more rent increase in your property, which is how they value multifamily, by having a 40, 50, 60, 100 plus unit apartment building. It'll allow you to have way more control over your money and produce and grow cash flow much faster. It's also a bankable asset. It's easy to get debt on it and leverage it because it's based on your rents. And so the question becomes, if you need to get money, if you need to find money, where do you find money, right? I always pick up every penny or dime or anything on the floor because to me, it's a sign that there's so much money in the world that there's literally money laying on the floor, that there's money everywhere. And so the question becomes, where do you find it? Right? Family and friends might have money. Your business should be a source of money for you. Equity in your home, IRAs, 401ks, and cash value life insurance. Between the 3 of these, there's more than $50 trillion of dead money. Money that's sitting there, ready to be used for other purposes. And most people don't tap into these situations. They end up going to hard money, crowdfunding. These are great places to get money. And most people have so much money sitting there, they don't even realize it. That they can take money out of the assets they've already created, already started, already generated, so that they can go create more money on their money. And so we show people how to do this. Once you have cash, the question becomes, where do you put it? Where do you put your money? And so whenever you figure out where you can put your money, you always want that thing to be liquid. You want it to be safe. You want it to give you a good return, and you want it to be able to control your taxes. Most people just put their money in these first two areas. Most people keep their money in the banks, and most people put their money in the market or a retirement account, which is really just in the market, right? Both of these are liquid. Banks, they say they're safe. They are FDIC insured. There's $88 billion of FDIC insured money right now that the FDIC has, but it's backing up $5 trillion of money. So the reality is, if we have another situation like 1929, there is not enough money to actually back up what the FDIC says they back up. We're going to have a major banking crisis if that happens. Return on your money, you don't get a good return in the bank. You can't control your taxes in the bank. You may or may not get a return in the market, and you definitely can't control your taxes in the market. You have to pay capital gains tax every time you take money out, and you have to put post-tax money into it, and so you're getting double taxed on this money, and it's a system that they've created to help create more taxes for the government. And so I'm a very type of person that likes to get out of the government. I like to get out of the system. I like to create my own economy and teach other people how to create their own economy tax-free. And so that's why I love real estate and I love life insurance. Now I see there's an X here for real estate being illiquid, but I like that real estate is illiquid because you have a real tangible asset that is going to produce cash flow if it's multifamily or an investment property. That's going to produce cash flow that you can't go touch, which is good because you sometimes want money over here that you can't touch. And if it's generating money for you, then that's a good thing. Now, I like to combine life insurance with real estate because then you can hold your money in life insurance and invest your money in real estate. And that's really what I came here today to talk about. A lot of people don't know that you can do that. Most people think about life insurance just as money that goes to your family when you die. And that's what most people have, and that's what most people think about. And it's the same thing with real estate. Most people think about real estate as their single family home. They think about life insurance as the money that they give behind to their family. They think of their retirement as a little bit that their employer matches with them. And they think about the money in the bank as the money that's left over at the end of the month. And in order to really build wealth, you have to completely flip all of that upside down. Now you have to think about everything that you think you know in a different way. This is why families like the Rockefellers have built multi-generational wealth for over 6 generations now, using a strategy that they call the waterfall method to actually use life insurance to create accumulation of wealth over generations that passes on the family legacy. Ray Kroc actually used life insurance to cover the key employees in the beginning years, and he also, I was just reading his book this morning also, grinding it out, he also raised $1.5 million to put into cash value from life insurance companies to actually buy the McDonald's brothers out when he started franchising it. He also used life insurance to do the marketing campaign for Ronald McDonald. Disneyland, Walt Disney used life insurance when he was all tapped out at the banks. They wouldn't give him any money, so he borrowed money from his life insurance policy to pay for the rest of Disneyland. JCPenney was all tapped out during the Great Depression. I like this sign here. It says $100 will buy this car, must have cash, lost it all in the stock market. And I feel like we're in a time that's very similar. I didn't add it to this, I just did a webinar on Wednesday, and if you look at the chart, it's a chart that juxtaposes the stock market, the mortgage rates, and the actual home prices all on top of each other. It looks exactly like 1929, and we're in a challenging time right now, and so it's important that when this stuff happens, you're able to use life insurance cash value to cover day-to-day expenses for your business and have money that you can access easily and effortlessly. These are some of our top clients, some testimonials. Isaac runs charter schools in San Antonio. He's used it to fund some of their expansion in Texas. Sean and Genevieve, they run multiple businesses in Palm Beach Gardens. They're probably our top clients. They have life insurance for their whole families. They actually use it in and out to be able to grow and expand their business. And then Alex and Penelope are good friends of ours also, and also clients that have life insurance for their whole family. And he's used life insurance to start and grow his custom clothing business. And this is really the whole concept, right? You asked in the beginning, you said let's just bring it really elementary level for everyone. And I was drawing this on, I got my handy dandy whiteboard on when I do appointments, but I was drawing this over and over and over again. And so we had our marketing team put this together in a simple 6-step process. So this is the whole concept of what we do. The first step is to get a cash value life insurance policy, or have your clients get a cash value life insurance policy, and put cash into that policy. Now, typically, when you're buying real estate with cash, you just go cash into this property. But instead, I'm saying put this cash into a policy and borrow the cash from the life insurance company. Then put the cash into your property. And by doing that, you see that the cash is actually not from you, it's from the life insurance company. And so you never have to deplete your cash ever again. Most people save up, and the first thing they want to do is buy a home, which is totally admirable. It's the American dream. I'm with you, I get it. However, the moment that you go buy your home and sign on the dotted line, the next day you don't have any money in savings anymore, typically. That's just the American dream, is I'm gonna work really hard, save up money, buy a house, have nothing left over. Now I have a mortgage for the next 20, 15 to 30 years, and you're in debt to the bank. And if you miss a payment, you can get your house taken away, and it's a challenge. And so if you put that cash into a policy, the life insurance company is actually gonna give you a loan of their money with your cash as collateral. Just like when you get a HELOC, they don't chop off a piece of your house and say, give me your house. The house is collateral and you get money on the side. Here, the life insurance company, your policy is collateral and they give you money on the side. And instead of having a 7, 8, 10% HELOC, you have a 4 or 5% life insurance loan. And then you don't have to pay every single month. There's no repayment terms. You set the repayment terms. And you can pay back on a schedule. You can pay back when you sell the house 10 years from now. And if God forbid you passed away, the death benefit will pay the loan back. And so it allows for more cash flow for business. So you can borrow cash from the life insurance company, invest it in an appreciating cash flowing asset. Most realtors focus on single family homes, and I understand that's the case for most people. Now, if it's the challenge with a single family home is it does appreciate, but it doesn't usually cash flow. In fact, it appreciates, but it's a bill.